Welcome to the DSMR. This briefing highlights where smart money is flowing as of this video date. As a quick primer, when smart money is distributing, retail investors are buying and institutions are exiting positions. And when smart money is accumulating, retail investors are selling and institutions are building positions. This data, including charts, graphs, and the ability to create bottoming signals, are available on Bottom Finders. You can find the link in the description. Head over after the video to create a free profile. And with that, let's start the daily briefing. In communication services, institutional activity reveals a split strategy. Smart money is currently in a markdown phase for diversified telecommunication services, entertainment, media, and wireless telecommunication services, signaling an effort to push down prices towards a discount zone to generate supply and chase away retail investors. Conversely, interactive media and services have entered a markup phase where institutional investors are driving prices higher towards a profitable zone to generate demand and attract retail investors through rising action. In discretionary, sectors are seeing heavy positioning in institutional forces. Smart money has officially entered an accumulation phase within both distributors and hotels, restaurants, and leisure industries, actively buying from the supply pool and from retail investors as they exit position. Meanwhile, institutional players have initiated a markdown phase for automobile components and household durables, pushing prices downward towards a discount zone to generate supply and chase away investors. Defensive plays within the consumer staples sector show institutional positioning for a rebound across most industries. Smart money is in a markdown phase for both food products and personal care products, steering prices lower into a discount zone to generate supply and chase away retail investors. On the other side of the ledger, consumer staples, distribution, and retail has entered a markup phase with institutional capital pushing valuations upwards towards a profitable zone to generate demand and attract retail investors. The energy sector presents a unified institutional push into higher valuation territory. Smart money has entered the markup phase across both energy equipment and services, as well as oil, gas, and consumable fuels. Institutional forces are actively elevating prices within these industries towards a profitable zone to generate demand and attract retail investors through rising price action. In financials, heavily anchored around building inventory, smart money has entered an accumulation phase for banks, financial services, and mortgage real estate investment trust REITs, buying from the supply pool and from retail investors as they exit their position. At the same time, consumer finance is undergoing a markdown phase with institutional forces pushing price downward towards a discount zone to generate supply and chase away retail investors. The healthcare sector highlights distinct tactical shifts. Smart money has entered an accumulation phase within healthcare technology, systematically buying from the supply pool and from retail investors as they exit their position. For healthcare equipment and supplies, institutions are operating in a markdown phase to push prices downward towards a discount zone to generate supply. Shifting to healthcare providers and services, smart money has entered the markup phase, pushing prices upward towards a profitable zone to generate demand and attract retail investors. The industrial sector exhibited a diverse mix of price adjustments. Smart money is in a markdown phase for industrial conglomerates, machinery, passenger airlines, and professional services, pushing prices downward towards a discount zone to generate supply and chase away retail investors. In contrast, aerospace and defense, along with air freight and logistics, have entered the markup phase where institutions are pushing prices upward towards a profitable zone to generate demand. In information technology, tech continues to see synchronized institutional push. Smart money is locked into the markup phase for communication equipment, electronic equipment, instruments and components, and semiconductors and semiconductor equipment. Institutional forces are systematically pushing prices upwards towards a profitable zone to generate demand and attract retail investors through rising price action. The materials sector is experiencing a broad institutional push towards lower cost boundaries, paired with a singular accumulation play. Smart money has entered an accumulation phase for paper and forest products, buying from the supply pool and from retail investors as they exit their positions. Meanwhile, construction materials and containers and packaging are in a markdown phase, pushing prices downward towards a discount zone to generate supply. Defying this trend, chemicals has entered the markup phase, lifting prices upwards towards a profitable zone to generate demand. The real estate demonstrates a multi tiered institutional approach across different property types. Smart money has entered an accumulation phase within real estate management and development, buying from the supply pool and from retail investors as they exit their position. Residential REITs are currently in a markdown phase as institutions push prices downward towards the discount zone to generate supply and chase away retail investors. Conversely, industrial REITs have entered a markup phase, pushing prices upwards towards a profitable zone to generate demand. And utilities is seeing widespread institutional maneuvers designed to reset asset pricing. Smart money has entered an accumulation phase specifically for water utilities, buying from the supply pool and from retail investors as they exit their position. Meanwhile, electric utilities, independent power and renewable electricity producers, and multi utilities are all undergoing a markdown phase, with institutional force pushing prices downward towards a discount zone to generate supply and chase away retail investors. In closing remarks, the goal in investing should be to move with smart money and not against it. And our goal is to find where the smart money is. An ideal bottom for going long is where the smart money has exhausted accumulation, and that's the dark green lines. Those are the bottoms we look for at Bottom Finders. We will include the text in the video description. If you find this report helpful, show us some love by clicking the like and subscribe, and we'll see you at the next one.